I'm live. I gotta Active Trader Pro. I'm gonna make it quick today. I have morning, Joe. I think I have furniture fixtures coming, so I gotta make it quick today. But I don't have that much to go over anyway. Didn't find that much yesterday. Where's my little... Okay, now I got it up near my mouth again. That's what she said. Let me see. There was a... the thing that I read or heard, I don't know, forget. It was like 5 minutes ago, and I still can't remember if I read it because I was on my phone. They had a problem with a powdered metal that is going to cause significant issues with repairs. So, I don't know. Here, let me see. Did I see it on FinViz? I mean, here. I think I was on FinViz looking at some of the reports. Yeah. Engine defect in earnings beat. Senate debates defense bill. That first one. The company disclosed it discovered a manufacturing defect in Pratt & Whitney. Oh, come on, stop. This one, Joe. That's the paragraph. Hold on. I put you on mute for most of the disgustingness, but I still got, for some reason, it's phlegmy. And I'm back upstairs, so I do have to text my parents. Let me see. Do I need my notes? Oh, come on. I'm going to move this up here. 10:45. You know, one that has been crazy good is DPST. God. Look at this. I mean, buy-in at 57. And it's still got confirmation above the 200-day. On the 65. Let me see if you're out on the 65. I mean, it's gotten you out a couple of times. But nothing crazy. You're in at 81. It's at 83. And everything except for Disney looks up. I mean, Disney's way down. Disney's just going to sell. Yeah. Joe, remember, any reaction in the market is an overreaction. And that's why, even Spotify this morning is down. It is down 5% at 155. It's kind of putting in, see that little shelf right there of back in early July? It's just kind of come back down to that. Algorithm still doesn't have you out per se, but it's been a long, slow, steady climb for Spotify. And if we go back to a weekly, I mean, you're just under the 200-day. So Spotify's not making money. They increased their sub base, but they're still, they're losing money. They're paying me too much. And trust me, they don't pay me a living. But here's the way I put Spotify. I use Spotify. And I like Spotify. I love Spotify. I think they're the best audio platform out there. I did not like Apple Music. I liked Spotify. Apple Music will be better over time, I think. But I just didn't like the interface. And it's not that they overpay me. It's that they pay me to do an ad for them. Meanwhile, why aren't they getting others to pay me for ads? I think 1 in 10 ads that's run on my channel, 1 in 20, something like that, is an actual ad from an advertiser. The rest of the ads are me talking about Spotify for podcasters. I mean, come on. That, to me, screams of ineptitude. When you've got tens of thousands of people listening and you're paying me to promote Spotify for podcasters, it kind of screams that you can't find advertisers for your podcasters. And I don't have an ad business. Now, maybe their ad business isn't doing so good because they allow people to place ads on the on the podcast that aren't inserted by them. So people don't opt in for the ads. But my ass doesn't want to hire a sales team. Okay. Let's see. We're going to just do scans because I'm going to make this short. What it is I've got furniture fixers coming today between 9 and 11. So, Okay. BA and Disney. I don't know. Do you buy Disney on weakness? I think so, but I mean, you've got to put in a lot of time with Disney to make money down here. CHRD at 151. When are their earnings? August 2nd. DRN. We got that up there. VNQ. Which one's this? Vanguard Real Estate. Spider Sectors XLRE. Interesting. PDD, NEO, Boeing, KWeb, XPEV. Hua. Saber. I like Saber. Let me make sure that's and Baba. Baba had another cross up. Saber has been nothing crazy. Look at Saber. I mean, this is below where it was pandemic when shit was closed down. Larry, I'm in Disney at like I think 95, 98, somewhere in that neighborhood. It's identified as a long, even though it's in a retirement account. Well, I'm sorry, I've got it both in a retirement and in yeah. The problem is I don't think Iger has the money to buy Hulu. I think that's the biggest issue. Is that he's just got no money. So he put half the company up for sale or partnership. HON, I like Honeywell. Okay, let's look up the NASDAQ and then the S&P. JD. We got a ton of. Okay, let's look at S&P. Oh, General Dynamics. Okay. I got enough. I'm developing new scans, by the way, for some very small volatility-based caps. So those of you with TrendSpider, I'll share that with you in the coming weeks. It hasn't been and when you guys see me scan, you guys see me scan a lot of large caps and stuff, and the reason is that's where the focus of my my portfolio is. So Pizza Stone is out for delivery. And, again, I'm not great with small caps, but if you want to know, where to look for, I'll include that in a newsletter as well for volatility. I think I've gone over it enough on here that, stock websites and then pre-cut market movers, investing.com has some just a great list. These are the market movers right now. Look, you got Electra Battery, ELEM, is up 64%. Bullfrog AI Holdings, BFRG, it's up 53%. Yoshuri Global is up 63%. Humanogen is down 71%. You want volatility? That's what you're looking for in traders. AMC has given back everything that they took. Here, if we go to AMC and we go to the 65-minute and we look at this, look at AMC. I mean, they're down at 584. They shot up for what, 2-3 candles? And it was because they can't take advantage of their shareholders by diluting them. The judge said, "Nope, you're not allowed." Hold on. And when a judge says no, he means no. Okay. Podcast. We're going to do this. I recorded a new ad for August. I think they're okay with it. They've said they're okay with it. So Okay, I'm going to start the podcast now because let me get back to SPY. Let me get to my notes. Where are my notes? Okay, I've got to move this over. Then I've got to move this over there. Okay. Fed meeting today, decision tomorrow. Overall, putting money in here. Does risk justify the reward? Meanwhile, there hasn't been a pullback of the grade 8. There is a resistance at 460 on SPY. Tom Lee says we're maybe going to two highs. Scalping strategy. And FSM for Brandon. Meta and Megas. Let's. Okay. Good morning. It's Tuesday, July 25th, and I'm going to make this one quick. We've got a Fed meeting today. The decision comes out tomorrow. Half point is what they're talking. I'm sorry, quarter point is what they're talking about. It's priced into the market. If we get a half point, you could get screwed with the market going down. If we get a halt again, boy, this market's going to take off. And there's two kind of camps out there. There's Mike Wilson, who has been completely wrong in that, oh my God, we're going down to 4,200 on the S&P. I mean, this guy has been basically screaming for the last 30 years that we're going down. He's been right a couple of times. I mean, you know, he's the biggest bear on the market. I think he's talking about a year-end S&P somewhere in the neighborhood of 4,200. I think that's up from 3,800 just a couple of weeks ago. Just FYI, let's see, where is the S&P? The S&P closed yesterday at 45.54. Tom Lee, on the other hand, the biggest bull on the market, thinks we're going to 5,000. That would make SPY at 500. And that's a huge move. I mean, that would be at over 10% from here. I think we wind up somewhere in the middle. I think we may touch 5,000 if we have that quote-unquote soft landing. I think Tom Lee has been more right than wrong. I mean, he called it the week of July a couple of weeks ago or last week, where he said, yeah, I think we get a 1%. And I bought TQQQ, and he was 100% right. I got out with a nice 10% gain. Hopefully you did as well. Tom Lee has been more right than wrong. He was on there this morning saying, yeah, I think all things are good. All things are moving in the right direction. Where are we in with SPY? Well, here, what I want to do is go to Seeking Alpha. And this is what I want to teach you guys. You guys can do this as well. DJI, which is the Dow Jones Industrial Average. We're going to chart this against select symbols. We're going to say SPY, and we're going to say QQQ, and we're going to say IWM. Those are essentially the Dow, the NASDAQ, the S&P, and the Russell 1000, I'm sorry. And if we just go to year to date, I've showed this over and over again. Qs is just greatly outrunning everything. Down at the bottom, you have the Dow up 6%. In the middle, you have IWM and SPY up 12% and 18%. That's just year to date. At some point in time, I told you, these have to converge. These have to converge. So either QQQ comes down, which it has started to. Dow Jones goes up, which it has started to 11 days in a row. The Dow is up. And these two are just kind of playing, hey, middle brother. You know, they're in there. These two are the old men ordering soup in a deli talking about the good old times. And this is the NASDAQ is the grandkid who's basically pounding on the waitresses, trying to take skirt up shots of him. And the bottom part with the Dow, that's the baby throwing applesauce at the waitress. So the baby throwing applesauce at the waitress is going to grow up. The NASDAQ is going to calm down. And these two ordering soup in a deli, yeah, they're going to stay kind of the same. So I think it's clear to me that through the last half of this year, we're going to see some catch up. Now, that doesn't mean you get out of the grade 8. It means that you plan carefully. I wrote a note. Overall, putting money in here, does the risk justify the reward? There hasn't been a great pullback of the grade 8. They're just kind of bouncing around. With SPY, there's a resistance at 460, and you're at 454. So if you close above 460 and hold, then I think you're getting into Tom Lee territory. But until then, I just don't see a huge justification to throw big money at this other than laggards. And when I say laggards, I mean oil. Look at Exxon. Chevron announced earnings yesterday, and they announced good earnings, and it shot up. Exxon is up at 105. Did you get it down here at about 100? It went down to $100.34. Did you get some? Because I think you're probably looking at about 108, 110. That's a nice 10% move in Exxon, which also gives off a nice dividend. It's a safe stock. So that's what I'm talking about when I'm talking about pullbacks, is these stocks that just haven't taken off. Financials. Great example. Bank of America. I bought in under 30. We're at 32.71. Wells Fargo. I bought in under 40. We're at 48.50. That's when it's dangerous to buy. Devon Energy. We're at 53. We were at 48 a few weeks ago. We're at 53. And these have good dividends. So it doesn't hurt to hold for more than a year and just pay the long-term capital gains of 15%. If they're in retirement accounts, you can trade in and out of these things. Take the dividend, trade after the dividend. Get out of it after the dividend. But you have to have a strategy, and that's the key, is having a strategy. Buying these little ones makes sense. Netflix, I think Netflix is up today. Let me see. Netflix is up slightly, 429. You're getting to that 430 level that I talked about. I think you're going to put in probably around 420. 420 is probably the best opportunity that you have to get into. Their earnings have come out. There is no more catalyst for this one. The only catalyst is next year. Remember, it's long-term for me. So am I worried about, I posted a chart in the Facebook group yesterday, and it had, the first 10 minutes of a stock, and it was bouncing up and down, and boy, you're nervous. Then it has the next 5 years of a stock taking off. I'm not worried about Netflix getting back to 500. It's just a matter of when. And I have identified that I want to hold it for long-term. So I got in. On the way down, I added more. On the way down again, if it goes down again, I'll add more. So make sure your strategy is there and stick to a strategy. Remember, if you want to take emotion out of the market, then get TrendSpider, get the back tester, get the strategy tester. Understand what these moving averages do. Take emotion out of it and say, you know what? I'm going to include a video, and it's this video right here. It's a trading view. And I talk about trading view a lot. It's a free tool. Then Trading Labs is great. They use Trading View to set up their strategies. This is a scalping trading strategy for beginners. There are 3 rules to this, and I will ruin the video for you. Rule number 1, trade when the stock is above the 200-day EMA. That's the red line that you typically see on my stocks. Trade above the 200-day. And you can pick whatever time frame you want, whether it's a 4-hour, whether it's a weekly, whether it's a monthly, whether it's a daily, whether it's a 5-minute or a 10-minute. Rule number 1 is have a 200-day and trade above that. Rule number 2, RSI divergence. They suggest putting a line on the RSI at 50 and only trade when it's above that line, meaning it's not overbought, it's not oversold, but it's in no man's land. And this is the RSI. That line right there is 50. Okay? Trade when it's above. Netflix went below. Trade when it's above. It's above the 200-day. It's above. This is optional, they said, but it definitely contributes to the positive momentum. Rule number 3, look for an engulfing candle. An engulfing candle is a candle that opens at a lower time frame than the previous candle. So the bottom is lower and it closes higher than the previous candle. So it basically could, think of Pac-Man. For all you old people, it's Pac-Man. The new candle would eat the old candle. Enter only at the green candles, rule number 3. That's it. And what they suggest is having a stop loss, 2 times the profit. So if your profit's 10%, have your stop loss at 5%. And you're basically risking 5% to make 10%. And that strategy and that scalping strategy, no matter what time frame you're looking at, should perform at a positive rate no matter what stock you pick. Unless you pick one of these crazy stocks like GameStop. I mean, GameStop is not going to make you money. GameStop is a hype fad. AMC, they came out. Adam Aram came out yesterday and said, listen, AMC, we're going bankrupt. We need to dilute shareholders in order to stay in business. And Zip Trader Charlie did a great video last night about it, about how they're going to go out of business. And the judge doesn't want Adam Aron to actually dilute shareholders. So you've got to understand that there's a strategy in here. Make sure that you have a strategy. And I'll include that video from Trading Labs. I like their channel. I subscribe to their channel. I don't use TradingView. I use TrendSpider. I've gotten that into my system. I live, I breathe. I love TrendSpider. So that's kind of where I'm at with that one. But you can use TradingView for free. You can use Trading Labs to look up strategies. You can continue to listen to this podcast. There's a lot of different inputs that you should have to try and find stocks that will make you money. Not just this podcast. I'm here to teach you, to try and help you to learn your own strategy. A good question, and Damon commented on the paid newsletter this morning from this weekend. And essentially, let's go back here. It's that was yesterday's news. It's this one, free tools that I use. And part of it is I go over my strategy on Netflix in that one, how I entered, why I looked at it, the reason behind it, and how it makes sense. Part of what he had mentioned was, hey, it's good to read about this stuff because, the strategies that you take all seem to make sense. And I articulate them to you guys through Savvy Trader. I try and say, hey, this is the reason why I'm buying. Yes, it's down, but I believe it's going to be up in the future. Kind of similar to what Brad Freeman does on there. He's great. He does some stocks that aren't making money, that are big, high growth winners, like the Trading Desk, Roku, I think he's got as well. Things of that sort. But he takes you through his thought process. And remember, he just got out of the Trading Desk with 90% gain. So understanding that if you have a strategy and you stick to it, you can make money. It may not be a trading strategy. It might be an investing strategy. And the reason I can't tell you, okay, you're going to do this, and then you're going to do this, and then you're going to do this, or the reason I don't want to tell you that, and Damon pointed this out perfectly, everybody's risk factor is different. The guy I traded with when I developed the algorithm, Steve, his process was different than mine. Even though we were trading together, his process was different than mine. The process is not the same. Everybody's risk tolerance is different. What's going to help you basically allow me to sleep at night, maybe something that keeps you awake at night. And something that's going to allow you to sleep at night, maybe freaking making me roll over. Joe's in Mullen. There is no way I'm holding Mullen. I held TQQQ over 2 weekends. That was uncomfortable for me. Completely uncomfortable. When I got COVID, I sold out at TQQQ because I knew part of COVID was brain fog. I didn't want to get caught in a situation where I gave up my gains. So understand that you have to have a strategy. This earnings week is big. You've got the Fed meeting today. Their decision comes tomorrow. It's already priced in the market. kind of like we said about Barbie, it's already priced in the market. The Barbie bounce was a month or so ago. If you believed in Barbie, I did not believe in Barbie. I was wrong. Barbie's huge, man. God, I'm seeing, fathers dressed in pink. That's when you know it's a cultural icon. But yeah, so we got a couple of earnings, and it's today. Microsoft. Let's look at the 4-hour. You're seeing kind of that button hook that we talk about a lot. The RSI is down here at 50, no man's land. The MACD has crossed down. The volume's kind of just getting, that volume right there was when they announced Copilot with ChatGPT. You got the earnings today afterwards. If you're not in this one, I don't think you get into it. But I also think there's a possibility this one goes to probably 360. So I'm not quite sure where this one's going. You can see right here from a weekly standpoint, we're right there at all-time highs because this stock has never been this high. When you were down here in 2023 at January, at the 200-day, should have gotten it. When you were down here in October with the October lows 2022, should have gotten it. Even when you were here August 15th, should have gotten it. I mean, just getting into this one doesn't seem to be an optimal time. Maybe this is the earnings where they come back down to reality, but that 50 days moving positive, that 200 days moving positive, the 9 days still positive, and the 21 days still positive. The MACD is just getting to a point where it's crossing over, and that's only because this one for the last 3-4 weeks has been trading in this range, hasn't broken out. Maybe it's capitulating. Maybe it's going to 400. But I'm in this one at significantly lower prices. I said to get it last week when it was under 330. Should have gotten it, but it might be a little bit too late. The other one that's coming out is Google. And Google's earnings, we talked about Google there after the bell today. The algorithm has you out with a 3% loss right there. This is the 4-hour algorithm. I said anything under 120. If it dips under 120, it's at 122 right now. If it dips under 120, just buy it. I mean, the danger with Google is that and I watched a great video last night on YouTube about how Google Bard may not beat ChatGPT just because people hate Google. And the reason people hate Google is they hate the incumbent. They hate the Google, look at Microsoft, or I'm sorry, Meta. The reason TikTok kind of ate Meta's lunch is not because Meta is bad, but people thought, hey, Meta is bad. They take our data. Look at the Cambridge Analytica thing. Look at them taking all of our data. Google's the same thing. And people don't want to use Bard because they want to use ChatGPT because they're like, oh, maybe it's not so bad. So it's not the big bad daddy. But Microsoft now is ChatGPT. So it's all bad. But Google, in my mind, I think they're doing it right. I think Bard is far better than ChatGPT. A, it uses the live internet. B, the interface is significantly better. C, I get a lot fewer hallucinations, I should say. And finally, you can integrate everything in Bard into Google Documents. It's fantastic. I don't have to take it out of ChatGPT and put code into Excel. That's what Copilot's doing, but they're going to charge for it. And Google's giving away for free. So I'm a believer in Google. I also, I use Gmail. If you don't use Gmail and you use Proton Mail, you use something else, maybe you don't want to invest in Google. I'm a believer in this one. So between those two, I do think that Google is probably the better bet. And if we go over here and we just go Google, let's go Google versus Microsoft. Let's put this up. And we'll put, we're going to put in the next one too. We're going to put in Meta and we're going to put in Microsoft. There. Update chart. Let's look at the year to date. Clearly, Meta is the killer. Now, Meta also, in my mind, has the biggest growth opportunity. I don't think Microsoft or Google have the growth opportunity that Meta does. Because when we talk about good companies with good earnings, this is now a good company with good earnings. And they haven't reached their previous high versus Microsoft and Google. Even Google, I don't think it's reached its previous high. Let's see. Let's go to a weekly of Google. Yeah, Google still has 148, still has 20 points to go before it gets up there. But Meta, same thing. I think Meta has a lower PE, a bigger opportunity because Meta actually has their large language model in Llama. I think they're going to come out with that. The thing you're going to see is they're going to hammer Meta about Spaces. I think the Spaces, is that what it's called? I can't even remember what damn thing is called anymore. I think that's what they're going to be big on. So they're going to hammer them on that one. I think under 300 is a great price. I may get into this one, probably a 4-figure investment today before earnings. You can see it's kind of button hooked a little bit over, but that's just what if the earnings are good and the stock goes down, that's people taking profits. Simple as that. Simple as that. So I know I've said I'm getting into Tesla at some point in time. I keep missing it. Tesla's up at 271. I wanted to get this one at 250. It's up 1% again today. Not getting the chance at 250. My life gets busy. I just don't put in the orders, and I should. But Tesla, I do own Tesla through ETFs, so I'm not completely ignorant or out of the game. I own it in ETFs. So make sure that your portfolio has some exposure to it, because this is a $300 stock by the end of the year. At some point in time, it's a $300 stock by the end of the year. We talked about how Meta and Google haven't reached their highs. Same thing. Look, you're almost 400 there with Tesla. Almost at 400. And you're at 260, 270. I think if you get this one in the 250s, I think you're fine. Just add slowly. One that came up yesterday, DRN. This was a trigger. This is the triple levered real estate market. And we talked about the real estate market really taking off. This is secondary cross up. The initial one was 905. You're at 1045 right now. Great play. That 945 was just a month ago, June 28th. So in a month, you've got what? 15% in a triple levered real estate ETF. Hasn't gotten you out. If you want to play the 65-minute, play the 65-minute. But it's clear this 200-day on the real estate is actually turning around. The 50-day, that golden cross just happened. So DRN and DRV are the two alternatives. Let me look at, Brandon wanted me to look at O and FSM. Let's look at O first. This is Realty, I think. Realty Income. It's a REIT. Real estate has taken off of recent. And you can see it's up above the 200-day. Their earnings are coming up August 2nd after the market, 14 days from now. You've got this descending triangle, which it has broken out of. And it's got all the confirmation that you need. The actual algorithm had you buy in here at 60. You're at 63. Not a huge move. A good enough move. The biggest thing with Realty Income is the dividend, 4.84%. This hasn't been horrible. REITs, in my mind, are not great investments. The thing you have to realize with this is the PE is super high, still high. PE is 44, forward PE is 43. This is predictable income. The average target price is 69. You're trading at 63. I don't think that you have huge upside in this one, but again, you're buying it for that dividend. You're buying it for a consistent 4.84%. At that rate, just buy a bond. I mean, you're not going to lose your capital on a bond. This one, I just think you're going to probably trade between 60 and 70. So it's not bad to have that income, but that PE is huge. If we do have some type of crisis, you had made mention of Dollar Tree and stuff like that. I don't know what makes up their portfolio. Read into it. The most recent, both sales, The Neil Abram, Seymour Marks, I have no idea. February, he sold $1.7 million. It's not a lot. Not a ton. I mean, these guys have a pretty big market cap of $42 billion. So it's not a lot to sell $1 million worth. But I'm just not a fan of real estate. Let's look at FSM. He wanted this is a silver one. Let's see what they do. Fortuna Silver Mines. I don't know if that's Fortuna La Fortuna in Costa Rica, which I love. I have a picture of myself under the La Fortuna waterfall, and it says, "Do not swim close; it will break your neck." It's kind of turned over. I would say right now, I probably wouldn't buy it. Doesn't have confirmation. 309 down there. I have never been a huge fan of metals. Much more a fan of the miners in these. That's what this is, it seems. But they only have a $1.04 billion market cap. Not huge. No dividend. Year to date, it's down 4%. The average target price, they don't have one. It's not hugely covered. Scotiabank just May 30th said $4.25. It's trading at $3.85. I don't know. I mean, you know, if this gets you excited, have at it, Hoss. I don't see any insider tradings. I mean, you know, I'd rather have something with a little bit more gusto, like Cleveland Cliffs. Their earnings are coming up, or did they report earnings? I don't know. Looks like they reported earnings. It is up slightly. Looks like it's up 0.97, 16.67. They reported earnings this morning, 69 cents. I think it was good. I still think this is a $20 stock. I just don't think it's probably boosting a ton. I own this one. I think average price is down to about 18 now. So I own it. I identified it as a long term. I am down on it, but I continue to buy on the way down because here's the long term. Let's look at a weekly. See, you're just touching the 200 day. You know, a little bit under there. So yeah, 32. I still think it's going back to 30. I mean, at some point in time, Cleveland Cliffs comes up there. So those are two that Brandon want. Now scans. I got a long list of scans. Like Frank Constanza says during Festivus, I got a lot of problems with you people. I got a long list of scans. Boeing. First one is Boeing. This one, I still say get it under 200. I think 214 is a little crazy. They have earnings coming up. Looks like today. Earnings reported pre-market. No, I'm sorry, tomorrow pre-market. Tomorrow pre-market is Boeing. Disney had a cross up. I'd stay out of Disney personally. I'm in, but 87.36. I don't think that's a bad price. I think at some point in time, you do come back to cover that gap. And that's what I'm holding out for. I've got this one in both brokerage and retirement. I think my average purchase price and I focus much more on brokerage than retirement. I'm sorry, yeah, on I should say retirement rather than brokerage because I can sell at any time in retirement. Brokerage, I think I've got about a $96 average price. I've added a little bit. I'll add probably a little bit more. I don't know that I'd necessarily get into this one. Energy name, KOLD. This is one that has had huge dividends. Here, let's just look it up. Stock dividend. We'll look up the dividend history. Oh, here we go. I can just go over here. We'll see HRD, and you can go over here. Oh, CHRD. We'll look at that. And we'll go to dividends, and we'll go to dividend history. Look at that. Yeah. $1.25. This was where $15. $15 dividend. $15. Last year it was huge. 2023, back in March, big, $3. This one, will they announce another special dividend? Probably. I mean, they're just going to make money. So it has a cross up here at 151. I don't think it's a bad play. The MACD is way down there. It's crossing up. The RSI is at 51. So I like this one. Talked about DRN already. VNQ, there's a couple. It's ironic that Brandon asked about Realty O, symbol O, because this one, Vanguard Real Estate, VNQ, cross up, and it's been doing really well. And spider sectors, XLRE, both of those cross ups on the secondary. So initial cross up was way back here at 37. You're at 38.98. For an XL for a realty sector, that's a great one. We had a bunch of Chinese stocks that crossed up. Pinduoduo, love it. Secondary cross up. China's putting more money. We talked about yesterday, Kathy Wood's getting out of China. All these Chinese stocks just crossed up yesterday because they announced more stimulus. Neo's at 11.74. The algorithm had you buy in here just over the 200-day at 9.40 on June 29th. Great. KWeb. This is the main China ETF, KWeb. So if you want just exposure to everything in China, KWeb. KWeb's not bad. XPEV. This is another car company like Neo. This has been a great one, 881. You're up at $16. You've doubled your money. Just in less than a month, you've doubled your money. One that I have in my own personal list that I don't know I'd actually invest in, I have not. I've got it in the list, is Sabre. There's a gap up here at 6, which is interesting because this has just been beaten down. If you don't know Sabre, these guys are a travel software for travel agents. And basically they use it to book everything. So Sabre's just that. BABA, we had a cross up. I think BABA, again, I've said it before. I think it's a $100 stock. When it was down here at 83, I was saying buy it, buy it, buy it. I'm not big on China. I did not buy it. So, yeah, BABA. Honeywell, HON, Honeywell. This is a great one, 209.15. I mean, it's above the 200-day. You got positive thing. You got the catalyst of the earnings coming up July 26th. Honeywell. JD, another Chinese company. Cross up. This was at 35.19. You're at 38.35. T-Mobile, TMUS. This is the one that I think is the best of the bunch. But cell phones, in my mind, race to the bottom. I'm not a huge, big fan of it. General Dynamics. Joe and I just talked about RTX. They reported earnings. They beat on top and bottom line, and yet the price crashed. Well, RTX came out with a manufacturing defect in their Pratt & Whitney unit. Like Joe says, Joe is our resident aeronautics expert. Any reaction in that stock is an overreaction. You can probably buy it. You'll be fine. So that is RTX. They reported, if you want to get into the defense sector, you want to get into that stuff, go ahead and do it. JD. And finally, AMT, American Tower. This is another realty thing. American Tower is a REIT. They got a bunch of towers. 190. 190. If you go over a long term of this one and we go to a weekly, it's been a falling knife. I don't know that I'd get into it. Crossed up. Could you play the rebound? Maybe. So, okay, there you go. Let's talk about where to go to get all of my links. Linktree. Linktree.com, linktr.ee/daily stock pick. You'll find everything. You'll find the link to TrendSpider. All of those charts are TrendSpider. You can get everything that I have, both algos, 4-hour and 65-minute, all my watch lists, and all the scanners. So when I'm on vacation, when I'm not doing something, you can go there. Visible, $20 off your first month of phone service. If you got phone service and you're paying anything more than $25 a month, Visible is the way to go. It's unlimited. That's what I have. So click on that link. Get $20 off. Your first month is $5. Third one, Webull. And like Larry says in the chat here, just opened up a Webull account. Very nice and easy. TrendSpider and Webull together, incredible. Both of them. I mean, don't take my word for it. Jump into the Facebook group. Ask people what they think about, TrendSpider and Webull. If you're thinking of getting started on stuff, they have a free 7-day trial on TrendSpider. The other thing is, who doesn't have a couple $100 to put into Webull? If you don't have a couple $100, you shouldn't be trading. You absolutely should not be trading. You should be investing your money. $100 a week, $50 a week, $20 a week. Put it into a brokerage account. Put it into some type of S&P tracking fund. Once you have enough money, get out of the S&P tracking fund. Start trading maybe 20% of your portfolio into stocks. Do things like that. Again, it goes back to what I talked to at the beginning. Have a plan. Stick to your plan. Savvy Trader. This is where you can follow my trades for free. I've got 2 portfolios. I've got a trading portfolio and I've got the core portfolio. The core portfolio, I just trade in and out. When I add a stock in TrendSpider to the core portfolio, I take one out and I sell that and I buy 100 shares of the new one. So I may take Moderna out. Moderna is a hype stock that just COVID, your boy's still positive for COVID, but COVID people forget about. And until they have a flu vaccine, I just don't see them being quote unquote trusted or hyped up. So both of those. So the other thing is dailystockpick.substack.com. Again, the newsletter, positive feedback on the paid newsletter. If you don't want paid newsletter, there's free. I do a free one to accompany the podcast every day. So you don't have to listen to the podcast every day. You can just get the newsletter in your email address. So, yeah. Okay. I will talk to you guys tomorrow. Hopefully I'm negative tomorrow. I'm going to test myself tomorrow. And let's hope that Microsoft and Google, both of which hold big portions in my portfolio. And let's hope they don't screw this up. They probably will. Okay, take care. See you guys. Bye. Export song to disk. I like my analogy of the little kid in the diner taking upskirt shots of the waitress. I thought that was good. Let's see. I think we'll be fine, Michael. I think, here, where did I put? Let's go to the Facebook group. Because I'll show you. Oh. Gonna go over here. Why did this all of a sudden crash? Let's go to the Facebook group. This one. This. 10 minutes, 10 years. This is the 10-minute chart. That's the 10-year chart. It's a perfect example of how investing goes. Investing versus trading. If you're trading, that's hard to live with. If you're investing, it's pretty easy to live with. Okay, good, Michael. That makes sense. I know Yelp, I think they were, the large language models were scraping them as well, and I think they had to put in some countermeasures to not allow them to scrape. Pavan, RTX. You want your RTX? What's the best time to get into RTX? Today. I mean, if you believe in the company and it's going to go up, best price is today. Right now, 97. Or I'm sorry, 88. It's at 88. Here's the long term. I mean, there hasn't been a bad time to get into. That's COVID. I mean, it's at all-time highs. So it depends on your time frame. It depends on your what you want out of the stock. But I don't like to put price targets on stuff. If you want to do a 65-minute algorithm on RTX, the new candle hasn't opened up yet, but yesterday's afternoon candle got you in at 98.97. And look, you're getting a bargain. It's at 87 right now. So I think it depends on what your time frame is. If it's long term, just buy it. Just buy it. Add in slowly. Add in at you got that gap up here at 103 to 104. You'll get there. Defense contractors don't excite me. I'm not a big fan of defense, because defense, no matter how you put it, is offense. Our defense is offense. What does that mean? That means killing and protecting. Anyway, for long-term hold of any REITs. You know, REITs aren't my thing, Michael. I'm not a big fan. Right now, I don't think REITs are horrible. But here's what you can do. Just go over to FinViz and go to the screener. And I think there's a... there is something. Let's see. How to find REITs on FinViz. Here. There's how you can find REITs on FinViz. And you can sort them by dividend, highest dividend. But the reason I'm not a big fan of REITs, Michael, is I think REITs pay you a good amount of money, but I don't think REITs reinvest in their properties well enough. So it's a downward cycle. So while you get the great benefit of that that dividend, I think you lose out on the capital appreciation because they just don't do a good job of upkeeping their properties. So that's my take on REITs. I think MPW is one that Sherry has, and it's a medical properties trust. It's been a good one. Had you buy in here at 9.10 and you're at 10.45. And I mean, you probably have a $20 stock there because you're nowhere close to the 200 day at 17. So MPW might be a good one for you. Because they have medical properties. And remember, medical properties are long-term leases. So it's good for that type of thing. Brandon suggested and he mentioned Dollar Tree and Costco, which they own. Another REIT that people don't really know is McDonald's. I think McDonald's owns a bunch of properties that they rent back to their franchisees. So, that's a good REIT as well. I think that's the model of theirs. But I ain't no expert. Okay, let me move you over to Active Trader Pro. What are we going to look up on Active Trader Pro? That's RIG. Brandon, RIG has not been horrible. But yesterday's just monster move isn't holding up. I mean, it's not coming back down, but let's look at Tesla. Oh, I gotta open up iMovie too. Let me see. Hold on one second. Boom, 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 boom. Okay, let me see. You know what? Let's do the one I really want is Meta. I want to get into Meta before their earnings today. And it's starting to open up. Let's see. I want to zoom in a little bit. Oh, Brandon, I went over your stuff. And I got to go because I may have furniture folks show up soon. I'm waiting for the text from the guard gate because I've got to corral the little monsters. Okay, here's Meta. If I get this one at 280s before earnings, I'm pretty happy. I'm probably going to put in a few $1,000s at least on that one. New episode. Select file. Do. Okay. Let's see, Meta. Let's see. 725. Oh. 23. Bum bum bum. Boom boom wah wah wah. Wah wah. Wah wah. Na 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 na. Tomorrow afternoon. Microsoft and Google are today. So tomorrow you have the Fed decision and you have Meta's earnings. It's kind of interesting. Larry, did you use my code for Webull? I'm just wondering. Some people have not. They're like, how do we switch it over? And I don't have any contacts at Webull. With TrendSpider, I can get you switched over. No problem. But with Webull, they're not as kind. Publish date now. No. Is my upskirt comment going to get flagged for inappropriate explicitity? Insert ad break. We're going to do that. Next. And oh, no. Let's see details. We've got to go back. Save draft. And we're going to edit this. Okay. Okay. There we go. Fed meeting. Next. Publish. Okay, now I've got to I gotta load this into iMovie. I don't think my mouth syncs up with on the video. Okay, and we're going to colorize it. And then we're going to export. Next. 725 pod. Do 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 do. Should have gotten it down here. 291. Okay. I thought it was my phone. Oh. Okay, I gotta go and do the thumbnail. Okay, let's see. Oh, hold on 1 second. Mom wants to chit chat. The stop is next, so I am gonna head out. You guys have a great day. Podcast usually starts about 8:30, Scott. I just posted on Spotify, so you can find it there. I will post the video in probably about maybe an hour or so on YouTube, but you can watch the replay if you want. I just got to run. The furniture fixers are coming, so I got to be at the front door and get the dogs